Hello, traders. FX Pip Collector here. Today is Monday, and it is March 17th, and this is my morning video where we like to take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely do check out my free Discord trading community, linked at the end of this video down here in the corner and in the description of the video. Also, don't forget to check out my website, fxpipcollector.com, if you'd like to get access to all these benefits listed below and more. So, anyways, first thing first, I think we should check the news calendar. Today is Monday, and Mondays are often very slow. Today we have retail sales and core retail sales for the US dollar. Definitely could see a little bit of movement out of that, but this is a very, very big news week. If you actually expand this, we have interest rate news for many, many, many countries this week. We have JPY interest rate news on Wednesday. We have US dollar interest rate news on Wednesday. We also have the Switzerland interest rate news on Thursday, and we have the UK interest rate news on Thursday. So there's a lot of news this week. It seems like the market has really been waiting for something, so maybe it's all the news coming out this week. To me, the US dollar index is still very bearish looking. The fact that we're closing below the 50% on both of these last previous weekly candles makes me think that even if it does go up, it's almost definitely just going to be a correction to the downtrend. I'm definitely still very, very bearish. I think we're going to go down to at least the 100% Fibonacci extension to finish off this big A, B, C pattern on the weekly and the monthly time frame. So on the daily time frame and below, the US dollar has been extremely, extremely slow for over a week now. Pretty much no price action on the US dollar in my eyes. Definitely makes you think that it could go up. But for me personally, anything I see to the upside is definitely just another correction to the downtrend. And really, there's not even any evidence that it really is going to go up, especially with the fact that we're below this fib level 2 weeks in a row, closing below it makes me think that even if it does go up, it might just be a bull trap and it might just end up continuing to make lower lows, lower highs. So I'm definitely still bearish on the dollar, which makes me definitely still bullish on most of the dollar pairs. So switching over to the euro dollar. Yo, dollar definitely is sitting right in between two Fibonacci levels. My next area of resistance for me is definitely the 78%. I think there's an extremely good likelihood that price will at least get up to that level and potentially much higher because of my higher time frame analysis. So I am definitely still looking for longs in an uptrend. For me, the dollar pairs were extremely slow for more than a week now. Very slow price action. But I mean, if you were still looking for longs, there definitely was some pretty decent long opportunities last week. I personally am definitely still looking for longs, so I got my Fibonacci retracement on this last move up. I'm watching my Fibonacci levels very closely for an engulfing move to the upside. It can't just be, like a move that pushes up and then pulls back like we're seeing now. It has to push up, it has to close above structure. It has to be nice, strong, three-wave pullback at a Fibonacci level for me to get long again. So I'm definitely still recommending longs, definitely still looking for longs, looking for a nice engulfing move up at a pullback, at the end of a pullback at the Fibonacci levels. So moving on to the pound dollar, same type of thing. Overall, very slow over the past week and a half, but we are definitely closing above the 61.8. I think there's a very good likelihood we're going to go up to the 78.6 and probably even beyond that. I wouldn't be surprised if by the end of the week this thing ended up looking like that. So definitely still very bullish on the dollar pairs. Going down to the 1 hour time frame. We did have a little bit of a fib bounce down here, but I put my fib from here to here because I wanted to point out the importance of a break of structure because we are kind of drifting up a little bit right now, but we don't have an impulsive move and a break of structure to the upside, which means that we can't really confirm that we're back into the uptrend without a break of structure. So we got our Fibonacci retracement from here to here. If we get a nice 78% fib bounce, we could end up going down again, and we could end up taking out this liquidity before we actually do go up, continuing the higher time frame uptrend. So just be careful. I always talk about, oh, I'm looking for three waves down. I'm looking for an engulfing move up. Well, that's not really all it is. You have to see a break of structure to confirm that a correction is over. Now, if this goes up and breaks structure, then hell yeah, at the end of pullbacks from that point on, I would definitely be very bullish and I would definitely be looking for longs in an uptrend from that point on. Otherwise, pay attention to these fib levels. They could end up giving you a little bit of a short, maybe going down, taking out these previous lows before it ends up pushing back up. Aussie dollar overall is kind of looking pretty strong. I still think at some point this Aussie dollar is just going to take off, and I still think the Aussie dollar is going to end up going way up here eventually. Now, does it have to do it now? It definitely doesn't. This could be like an A, B, C type thing, and then it takes off to the upside. So maybe it's ready now, maybe not. I don't know. I got my Fibonacci retracement here. If it goes back up to like the 78% and then turns back down, obviously it's not ready. If it blows past that area and goes up and starts making new highs, then I would definitely say that we are in a wave three, and that overall on these higher time frames, it would continue to trend up for probably a long time. So going down to the 1 hour time frame is where I got my Fibonacci retracement from here to here, because I definitely would look at this as possibly being an ABC correction. It looks like it could just be a double ABC pattern. So three waves down, ABC down, three waves up, ABC up. That means that this could turn into five waves down like this for like a 3-3-5 pattern. Or maybe it could turn into three waves down for more of a WXY pattern, which is 3-3-3. So watch your Fibonacci levels. If it makes an engulfing move down at a Fibonacci level, this 78% especially, then I would say that that's almost definitely three waves up, and it would almost definitely go down and take out these previous lows with either five waves down or three waves down. So moving on to the Kiwi dollar, which is exactly the same analysis, except for the Kiwi is actually quite a bit stronger right now than the Aussie. So it's exactly the same analysis though, so I don't really cover it too heavily. Moving on to the US dollar Canadian. The US dollar Canadian has been pretty sideways too, but I still think this needs to play out as a proper ABC. I still think this is a one, a two, and I still think at some point we're going to start a huge downtrend for wave three. But I think we're likely several weeks away from that. I think this is A, B, C, and then probably up. So that will complete the A, the B, and the C pattern. But on the shorter time frames, I think we're in an A, B, C, a B that is likely not even over yet. So taking it down to the 1 hour time frame so I can show you that. On the 1 hour time frame, this move up over here is too impulsive for me to be a complete wave B. Most likely it's an A. Most likely this is like a 1, 2, 3 down for like a wave B. More than likely, I think at some point we're going to get a break of structure to the upside, and it's probably going to continue up for a C. Then we would have what I think would be a complete A, a complete B, and a complete C, which you should have an ABC or some sort of a corrective pattern for the wave B. So A, B, C, or B, and then likely back down for the bigger wave C, like I was showing on the much higher time frames. So keep an eye out for a break of structure. It seems like it would probably take out these lows before it did break structure, maybe something like that. But keep an eye out for a break of structure. I wouldn't become bullish again on these sort of time frames unless I saw that impulsive move up and break of structure, which we don't have yet. Moving on to the US dollar Swiss. I mean, I'm definitely extremely bearish on the US dollar Swiss. I think this is a wave C up here. If that's true, then it will likely eventually take out these lows. I've got my Fibonacci retracement from here to here. I'm watching my fib levels extremely closely. If we get like a nice engulfing move down at a fib level, then it's almost definitely going to end up continuing the downtrend. If it doesn't engulf down, then it might end up pushing back up to one of the higher time frames, the higher Fibonacci levels, that is, before it actually ends up pushing back down. So as always, keep an eye on your fib levels and keep an eye on your higher time frame, engulfing moves and stuff. Because going down to the 1 hour time frame, I don't have the fib from here to here because as of right now, we got our Fibonacci from here to here because there's really no proof that it's going down yet. This move down could be just a correction to the last impulsive up. So we are at a fib level on the higher time frames, but it hasn't broken structure down yet. So in order for us to believe that it's going down, we had to see a breakdown and then probably a pullback and then the continuation of the downtrend. Otherwise, keep an eye on your Fibonacci levels extremely closely if I zoom back in. Because if this makes any sort of a corrective pattern down to any one of these fib levels and it makes it a golfing turn up, especially if you get a break of structure, then I would go long again. It all depends on what kind of time frame trader you are. Because technically, ever since we broke structure to the upside way over here, I would have recommended longs for anybody trading the 1 hour time frame and under. But if you're more of a swing trader, then you probably are waiting for the big short opportunity. I think because of the fact that we don't have a break of structure to the downside, you would have to still be looking for longs if you are trading the 1 hour time frame and below. So moving on to gold. Gold is at a kind of a crucial point right here because I've been forecasting this $3,000 an ounce area for months now, and we just hit it on Friday. We just hit that $3,000 an ounce area. I still think it's kind of missing a wave four. I still think this looks like a one and a two, and then this is all the wave three. This still could be an A, a B, and then it goes down for a C, and then back up for wave five. So keep an eye on it because this is a very important fib level. Also, the $3,000 an ounce seems like a very, very round number. That would be a very big number for resistance, possibly. So if it does start to go down, it's probably going to go down, take out these lows, making a wave C, and then going back up, making the wave five. So that would be like a wave three, a wave four, and then a wave five, most likely. But we can't really assume that that's going to happen. We need to see a turn on the sort of time frames. Going down to the 1 hour time frame, I think this right here would be my structure level. And it has not been able to break below here yet. So if you get a break below this structure, this is a big key. If it breaks and holds, there's a big difference between breaking and holding and then spiking down like that, like it did over here. That right there is not a break of structure. A break of structure is when it breaks down with momentum and holds below structure. If that happens, then I would definitely switch it up and I would start looking for shorts. If it doesn't happen, then I wouldn't do that. And we don't really know that the trend is over. I mean, there's always a chance it just keeps on going up. I'm just saying that if it does turn down here, if it does break structure, it would be a really nice sorting opportunity. But we have to see it go down. We have to see it break and hold below structure to believe that the turn is really in. And moving on to a couple yen pairs. I mean, the dollar yen is 100% still in a downtrend, as you can see. I mean, the structure's way up here, so anything we see to the upside, we should assume is just a correction to the last wave down. So I personally would be paying very close attention to these fib levels for like a nice engulfing move to the downside, which we definitely don't have yet. Moving down to the 1 hour time frame, this is actually playing out just like I said last week, which is likely a wave A. This is likely one, two, three waves down for wave B, and we're likely already in a wave C. I think it's more likely it'll go up to the 61.8, probably something like that. So if you see it go up to a fib level and make a nice engulfing turn, especially if it breaks structure, then I would definitely take it as another sort. If you are trading, the 1 hour time frame and below, ever since we got a break of structure to the upside at the beginning of last week, I would be recommending logs, and I would probably still recommend logs for anybody trading the sort of time frames. So if you're trading the sort of time frames, keep an eye out for logs. If you see it go up to a fib level, making a golfing down and a break of structure, I would stop looking for longs and I would start looking for shorts again. So moving on to the euro yen, the euro yen has broken structure up. But because of the pound yen, if you look at the pound yen is a higher low, and it is a 1, 2, 3 pattern. So if you look at the euro yen is not a higher low, it's a lower low. And the euro yen also broke structure to the upside. But because of correlated pairs, I'm still thinking that this could be an A, a B, and a C correction. And the only reason that this broke structure is because of how strong the euro was for a couple weeks. I got my Fibonacci retracement on this move down right here. We're at the 78% right here. If it does turn and start to engulf down, then I would say it's an ABC correction, and I definitely would get short again because the higher time frames are definitely still in a downtrend. I mean, lower high, lower high, lower high. This could be lower high. It could literally just keep on making lower lows, lower highs down to around the 148, 146 area that I am forecasting for this potential wave four on the weekly time frame. So, taking it down to the 1 hour time frame, more than likely, I would be. I mean, if you're trading below the 1 hour time frame, I guess I would have to recommend longs. I don't think I would really want to go long now, but I would probably recommend longs. But I would really be keeping an eye out for a nice solid break of structure to the downside because I still think there's a good chance at some point this is going to end up continuing the downtrend in a big way. So keep an eye out for a nice solid break of structure, especially if you get like one more pop up, a nice liquidity grab, and then down, and then a break of structure. If I see something like that, that definitely would be a short for me, 100%. And moving on to the pound yen. Pound yen is definitely still drifting up, but we don't have a breaker structure, and I still think there's a very good likelihood this is some sort of a ABC correction right here. So we are at the 78%, or we're approaching the 78%. So if it does react to this area, if it does, excuse me, sorry. So if it does react to this area, if it does go down and break structure, I still think it would make for a very nice sorting opportunity. So keep an eye out for that. Now, just like some of the other yen pairs, I mean, technically, if you're trading the 1 hour time frame and below, ever since we had a break of structure up almost 2 weeks ago, I would have been recommending longs from that point on. But if you're still kind of waiting for the sorting opportunity, I would be waiting for a break of structure to the downside. So maybe what's going to happen is the same thing on the euro yen is it's going to go up, grab liquidity, then turn down, then start giving us a break of structure. If we see it go up and grab liquidity and then go down and break structure to the downside, then I would definitely stop looking for logs and I would start looking for shorts again because like I showed you on the daily time frame, we are sitting at the 78%. If this really is a wave C, that 78% is definitely probably where it would likely turn to the downside. So keep an eye out for like a liquidity grab, break a structure to the downside, and potentially the continuation of the downtrend. So, anyways, don't forget to join my free Discord community. And as always, thank you for watching and happy trading.